Yo, what's up, y'all? Hope everyone's doing well. Had a pretty crazy situation go on the last couple days, huh? Nobody's getting their civilization destroyed. Yeah, what we have seen, at least for the bones and yields, kind of back and forth, right? Still engaged in the retracement. So, but yeah, so hopefully you guys have had a good week so far. We have news in 10 minutes, so we'll see what that does. But yeah, good morning, Tony. Should be a pretty chill day. There's a lot that can go crazy. We have CPI tomorrow. So today may anticipate what happens tomorrow. I got a little indicator that I'm creating too for my private group. You can see it's calling some pretty good moves. It's at 68% so far. So that's interesting. See if we can get it to 70 and then I'll launch it. But yeah, for now, let's take that off. Let me see. All right, so take a look at the three indices. We do have this fair value gap here. I was talking about this yesterday with my private group. We actually anticipated before it took place the decline that's taken place. Large ranges lead to small ranges, but small ranges lead to large ranges. We ended up taking this liquidity pool up here. Because this is a market maker buy model, where we have sell side delivered, buy side, we have displacement through the gap in here, or all these gaps, like this down movement. It's basically overlapped it exactly like to the tick pretty much, right? With the exact same characteristic. So a lot of times this is going to act as a balanced price range. So with that being said, when you take this and you do a measurement, go find, there it is. If you take this and you do a measurement, we have the upper 25%. That's more so what I was focused on with my private group. If you look at the markup I sent in the free group, and those of you that were with me live yesterday, you know that this is true. We anticipated that it wasn't going to go beyond the 25% retracement here. So we may see it continue to stay up in that area because, again, we don't want to see it break through this. Right, so it could look to try to sweep some of this out. I would prefer that they kind of stay inside this. If they send a wick down into it and then closures of the bodies still stay within that upper 25%, I think it's reasonable. If they did want to sweep that, because think about it, people rush their stops here. If they didn't get taken out, right, in this big run, they did rush their stops below this low. Right, but again, this upper 25% level, it's significant because it's a very fast move and it's overlapped with a downside movement over here. Okay, and we could see that that's unfolded. We talked about trades towards that direction. I didn't take a trade towards that direction. When it gave this little bounce in here, I did end up taking a trade with my private group. So the indicator that I am making also kind of called out a buy too that we watched unfold real time live as it tracked it on its own, right? So the indicator that's coming basically is me taking my mind, one of my models, the Razor model, and putting it in the chart so students can study it, but then also use it as a, a tool in itself. So we do have a gap in here on the dollar. You guys see that? So that's kind of interesting. We have a high, low, failure swing, breakdown. Oh, the bonds are starting to take a move, or make a move, huh? Got that weekly wick here, 50%. Simply retracing. We are still closing below that fair value gap here. And then again, we have this bearish breaker for the, what is this, the bonds. So yeah, we definitely got to keep tabs on that. On this chart here on the 5-year, does it look like it's closing outside of that? Does it look like it's inverting that fair value gap? Is it like super, super aggressively trying to get outside of that? Right? Did it create an imbalance that overtook it to leave a balanced price range? Is it disrespecting this order block? I don't think so. So until that happens, right, until it breaks up above this, I'd prefer to see this order block give it up. Because at this point, it's just a displacement, retracement, fair value gap rebalance, coupled with an order block. And we got some lows down here that could be targeted too. Same with this, relatively equal lows. And then the trendline liquidity here that I was mapping out for this asset, obviously it came down into it. So again, it just looks like it's displacement, retracement. We have accumulation, manipulation, distribution, rebalance, retrading to the imbalance, and we may get redistribution that then targets the lows down here. I wouldn't be surprised if that's what happens. Good morning, George. If you guys could let me know if you hear everything okay, see everything okay, that'd be great. Is it cut off? Wait a minute. Okay, no. All right. Thank you, George. But again, we have basically walked this market, right? The indices, right, hasn't really been too shocking overall. My indicator's been firing off pretty good opportunities the last couple of days, which is pretty nice. Of course, we do our own discretionary observations as we're testing this to see if it aligns. There's obviously improvements, but at the same time, we're not really going to need to worry about it too much. Okay, there we go. So yeah, with that being said, right, we do have this first presented fair value gap here. Let me just go double check to see if it's on the 1 minute too. Let me see. The 1 minute. See, it's actually not present on the 1 minute. It is present at 2012. There's one right there. So yeah, we got London's high here. We got London's low down there. So these are liquidity pools you're going to want to pay attention to this morning. Maybe not so much London's low unless we start to break down. We have this high. It's a high, low, higher high. So this down movement with displacement should end up acting as a BPR. If it wants to drop down a little bit, that's great, right, to try to work this a little bit. But it should not, if it's bullish, go through that. It's been very aggressive, so I wouldn't be surprised, if they hold price a little bit up until, we get the chance to see CPI and what it does. Again, if we go to the 4 hour, let's see, why is it not there? Yay. There we go. Okay, so that's there. Let me put this over there too. When I think about power 3 as well, where are we in terms of power 3? Right, we have accumulation, manipulation, current low of the day, current high of the day. So it looks like it's more interested in trying to get up there, especially if dollar keeps this up. That's a huge gap in the dollar. Like, that's obnoxious. Let me actually remove this. So it kind of failed to hold any of this. And I mean, look at the huge gap. I mean, it's insane. I think all of this was because things didn't escalate in Iran, at least up to this point. So, you know, we'll see kind of if that continues or not. If it does continue, then we may get things to snap back and, you know, be normal again. Those of you that have been with me for at least over a year, like early last year, if you were with me, up to this point, we called the low of the year. We may have that same thing happening here, right? We had to just watch this delivery into this fair value gap, which is also a daily wick. It respected that and displaced. So that, for me, confirms that this low is now being protected. This low is in that quarterly fair value gap. All right, it's in that quarterly fair value gap that we called off the wick rejection here from the yearly chart. And it seems that since we're now above that quarterly level there, and price is refusing to really go beyond that, I do think that we should be able to see it continue, honestly. And the quarterly fair value gap will have set the low, or have allowed the low to set, just like last year. How this price delivery in here was also basically setting the low inside of a yearly order block. So we've got a yearly order block that set the low last year after, and then it accelerated. Look at the date. Look at the date. Excuse me. Look at the date. Okay, April. What's the date on this? Right. Well, let's go actually to the daily chart, make it a little more obvious. March 31st. Okay, that's what the date is here when this low was set. Basically April 1st, March 31st. And again, if you scroll back, you look at this one, April 3rd, right? April 7th specifically. That's when the low was set last year. Isn't it ironic how the lows are forming at very particular times seasonally? Don't we talk about seasonality a lot and how important it is? Don't we talk about how important these higher time frames are, like ad nauseum? Don't we talk about this just all the time? This is why they're so important. So you could do things like this. Most people probably didn't anticipate that there should be some kind of rejection here potentially. Most people didn't see this quarterly fair value gap. Most people didn't trade into that as a target, but we did. We've been aware of this. And this wick here being respected, right? This one right here, which is what we watched from Sunday. I told you guys we have to watch that. And depending on how it holds, if it breaks down and gets below this low, that means we continue to go lower. If it holds this and rallies up above from that and stays above the midpoint, we'll continue to potentially go higher, especially if we were to take this high out. And what happened? Price got above it. It proved respect to it, and it's been off to the races. So it's been nothing but buy-side delivery at the moment. So, of course, we'll see what it wants to do in relation to that, because it has been extremely exaggerated. they could come a little lower, or they could drop it a little bit. We do have this weekly wick in here. So we have the midpoint of that, which we can measure that out. I think that's going to be significant. You see that the monthly open for March accumulated, manipulated, and now we're distributing back above that. And we're, March declined and then ended here, right? And then April started right there, right? With this candle, what did it do? Drop down, set a wick, rejected from this fair value gap down here, working that quarterly fair value gap I just talked about, and now it's holding in price. And now it's continuing to go, right? So, we'll see what it wants to do. We do have to keep this in mind just in case this midpoint fails, because then we may see a market maker sell model in here to try to come and clean up a little bit of this imbalance that was left from the last couple days. Okay, and then of course we have this 4-hour. It's also an 8-hour fair value gap. Right, if price does get above that, see it runs up here and takes this high and then decides to respect that. Maybe it trades down into this high. We have an up candle here, or a couple of up candles, decline. So we got high, low, higher high. Take it to the 1 hour, maybe we could see possible breaker forming. Yeah, right here, high, low. If it creates a higher high, this could be looked at as a bullish breaker. There is trendline liquidity here. Is that no, okay. This is what I believe, yeah, the central bank dealers range here from the other day. That's what it looked like. Wild. But we have the central bank dealers range here for today. So that's a projection tool. So if we think power 3, right, prices declined, we're kind of consolidated. Maybe it looks to drop. Again, I wouldn't want to see it break past this level here. Right, we're still inside in that case, the upper 25% or close to it, right? Still above the midpoint. So that fair value gap has a long lifespan until it ends up getting traded through the midpoint, which is, the moment that we would then have to think about adjusting potentially, or at least being cautious. And we'd have to wait for a pretty dramatic change in state of delivery, at least from the 1 hour, 4 hour, preferably the daily, right? If it does, do that type of stuff. So yeah. Bro, I've been in a live stream with 200 viewers and just dropped the bomb that she's not even profitable. Who? Wait, Eddie, who the heck? What? Are you? I'm so confused. What are you talking about? Some chick? That's a very random comment. Okay. What exactly is the importance of this? Most of these traders are not profitable. Yeah. Yeah, it is crazy. It is crazy. They can't do half the things that we do here on like live publicly, let alone privately. Yeah, most people are not profitable, but you don't have to worry about that here because we prove it. So yeah, watch who you watch. Okay, if they don't do stuff like this and you can't like obviously prove that they're profitable, I would not waste your time. This is your future that you're trying to deal with. You know what I mean? And if you let it be in someone else's hands that you don't even make them prove it to you, like what are we really doing? Right? But people in the chat just eating it up. Yeah, of course. They probably, I mean, let's be honest, bro. A lot of girls get attention because they're girls. Yeah, exactly. Simping, exactly. It's not everybody, but let's just be honest. It's easier for girls to go viral. It's easier for them to get attention. They just got to wear some, shirt that they pull down a little bit. And even if they're just like idiots, don't know what the hell they're talking about, guys will eat it up. And then they get views, and then they just eat it up. You don't want to just look at like a pretty face when you're getting information about this. Remember, this is your future that you guys are trying to really deal with and make better. You should not really care who it comes from if the information is useful. you should be looking at the value and trying to learn how to do this. So you're not just depending on someone's signals. You know what I mean? So yeah, it's unfortunate you got banned, bro, but hey, it is what it is. But yeah, so does anyone have any questions about what we've talked about so far? Or any questions before we get closer to the 6:30 time? So let me know in the chat. It's not really doing much right now. We did have news that just came out. I believe that's all it is here. Yeah, we only have 5:30 news today. So we'll see what it's going to do here. So yeah, that the 2-week ceasefire talking about in Iran, yeah. Yeah, that was the purpose of this low, just like the tariffs when I called the low last year. The tariffs, he went above and beyond, and then next thing you know, he's like, "Oh, we're not going to do the tariffs actually that crazy. It's just going to be 20%, not 120." So the market liked that because that was certainty and it wasn't as dramatic. So same thing here. He said he was going to bomb their civilization. Price immediately declines, and then he's like, "Oh yeah, just kidding," right? So once he said he's just kidding, there was a daily wick in here that was respected, which we were watching since Sunday. And of course, it gave up the ghost. And then yesterday, like I said, that displacement led to a decline, leaving price in that upper 20%, upper 20, 25%. So we may look to try to wipe this out once more, maybe. Prices consolidated. We have CPI tomorrow. So we're in low probability conditions up until CPI comes out. Doesn't mean there's no opportunities, but still, I think that there's going to be a lot of waiting going on. Unless you're a gambler, then you'll just blow your account and reset. So doesn't really matter what I say in that case. So yeah, so we'll see how this behaves. All right, we got external was taken here, and then we got a change in delivery because of geopolitics, and so that then went from this being external to now the highs are external. So it took external liquidity and now it reached for internal, which is part of what we used yesterday and what we're going to consider today. So you got to think though, if the ceasefire doesn't unfold properly, things like this would be unreliable. So at any moment, this is the risk, right? At any moment, someone can break the ceasefire. And then what happens? The strait gets closed, all this stuff that has led price to decline or influenced it to decline could continue to unfold. So it's a very, very tight rope right now. So that's the risk. Things can totally change in like 5 seconds. So we got to keep that in mind when we're taking trades. My only objective is to see if we can get up above here. But before we do that, we have, again, London's high. If we go down to the 5-minute chart, whoops, let me move this to the 5-minute chart. Okay. So we got the London high, London low. Those are the first initial targets. One of those is going to be used as either counterparty, basically sweep and then go the other way, or sweep and go the other way, target the low here. Like one's going to be a counterparty and one could be a target, right? Or it could just use it for one of those functions. We do have this as the previous AM session low. So that's liquidity down there. So we do got to be cautious. It could go down there. Again, I would prefer that it doesn't go down there. I'd prefer that it stays up, leaves this available, and we stay inside that upper 25% of that range. Okay, because if it does that, what is that telling us? Can you tell me in the chat? If we get a retracement into any fair value gap that we're using for a model to trade or frame a setup off of, right? If it's holding in that upper 25%, what is that telling you about that PD array? Or any other PD array if this same characteristic is happening and you're bullish, right? What is it telling you? Yeah, let me know in the chat for those of you that may know. Where's the thing? Oh, there she goes. Yeah, it's a bullish signature. Exactly, George. Exactly. Exactly. So, and it's the same thing if it was bearish too, and it was reaching up into, some bearish PD array. So yeah, like I said, the first target would be here or here. Obviously, it was closer to this, so it ran up there. We're approaching the first macro, which I call the unreliable macro. We have a lot of wild swings right now. It's very wicky, very back and forth, still sideways. So we'll see what it wants to do here. All right, again, we got this low. I'm very curious if they're going to try to run that and then try to jam it lower one more time, because CPI is tomorrow. And if that happens today, where it tries to hang out in this upper 25, upper 50% level of this fair value gap, then, it should be able to hold, and then CPI tomorrow could give up the ghost and go higher. Yo, what's up, Mike? Appreciate you hopping on, bro. What's up, Fancy? So yeah, and again, we got this upper portion here. So we'll see when it gets up above that, if it can come down into it and then hold. I think that it'll just continue, right? Yo, what's up, Reyes? Hope I'm saying your name right, bro. Welcome. So again, if you think power 3, right, we have accumulation, it's manipulated, right? We've had that retracement from yesterday. And again, we would prefer to see it stay in this upper 25% of this fair value gap. We have a previous week's high up here. Not only that, we have another one that's even closer actually, right? But that got swept yesterday. So we got these liquidity that are active right now, like this liquidity here. Previous day's high, which could get targeted if, again, we stay up above the upper 25%. Because we have CPI, though, no matter what you want to do or what you think you want to see in price, you cannot avoid the reality that CPI, NFP, FOMC, they're wild cards. They can do things that nobody can expect, even ICT himself. He said this numerous times as well. So if you come into weeks like this and like days before news events and you're demanding that it runs like directly to some large target that's like 1,000 points away, even 100 or 200 points away, like with no issue, if that's your expectation every time you go into these days, that's probably why things get blown, because then you push too aggressively. That's like running into a battlefield when there's bombs blowing up everywhere. You could rush the front line if there's not a lot of craziness happening, right, with lower risk. But if you rush the front line for literally no reason, when you can just wait, when there's bombs blowing off, right, literally and figuratively, like super volatility or geopolitical things taking place, and the news event that comes the next day, I mean, you're just asking to blow your account. People don't like to hear that. They want signals right now, like give me in a trade. But that's a difference between why people can stay in this industry and why people get removed. Because it's a mindset, you know what I mean? It's an understanding of the terrain that you're working within, So we have to keep that in mind. Doesn't mean that an opportunity won't be found, right? We always find something. Every single day we have like 2 or 3 setups. But now are those 2 or 3 setups worthy of an execution? Sometimes they're not. Do they play out most of the time? Yes, they do. Right? But you still got to keep in mind what's going on. I have almost a decade experience trading. Right? So that experience and understanding is going to be different than someone that has 1 year. The trust and conviction behind something that I talk about, for me, it's going to be a lot stronger, right, than someone that is just learning or just showed up and is just trying to find their way, right? So you want to keep that in mind too. When I call out moves, if you don't see it aligning with your setup or your model, I really encourage you guys to just wait till there's a setup that does align with what it is that you're trying to do, right? Because if you don't, and you make that a habit where you just follow people just because they sound like they know, or they have a skill set, if you just follow people's information like that and you make financial decisions off that, which I don't encourage you to do, you will be met with codependency, and you don't want to be codependent. I teach independence here. So just keep that in mind with everything that we talk about. If the analysis makes sense, great. If an idea looks like it aligns with your setup and the analysis, great, right? Then you can make your own personal decisions on what you're going to do. But you want to pay close attention to why we make decisions. Like, what is getting us to believe that, hypothetically, something's going to be bullish or bearish, right? What is the inner pieces of information that's getting you to that opinion, or getting me to that opinion that I'm talking about, right? Those are things that you want to have a very detailed answer to. And if you can't describe that whenever there's an opportunity being shown, then you're going to have to think twice, right? Because you have to make a decision. Are you trying to be codependent and try to follow somebody that's, proven they know what's going on, right? And make it so if they're not on, you can't trade? Or are you trying to make it so long-term you have a reliable thing that you can fall back on and, be proud of, personally, like on your own, right? You have two options you could choose. A lot of people live in one, right, for a little while until they figure out how to do it themselves. But there's a lot of people that just sit and try to find signals and all that. And I mean, you could just imagine, like, is there any signal taker on the internet that is popular and famous because they got rich off of taking someone's signals? I mean, that's not a story that you hear, right? It's the independent traders, right? It's the ones that can do this on their own, that put in the work, that made the sacrifices, that didn't just look for signals. At first, it's great, right? Because you want to see what good setups look like, and if you're following someone, you're starting to understand their tactics. That's one thing, right? But too many people live in this signal junkie mentality. It's basically like someone selling you drugs. If someone goes and tries to get signals from someone all the time, and that's the only way that they trade, how is it different from a drug dealer and a drug addict? Like, they're coming for the same thing, trying to get a dopamine hit, plus try to, make money off somebody else other than themselves. But what's the difference, right, between a drug dealer and a drug addict versus a signal provider who doesn't explain themselves, and someone that is trying to take those signals and solely depends on those signals? Because you end up getting this, again, codependency that can become a real serious problem. And that's why I don't really favor that type of behavior. That's why I do what I do. I teach you guys how I do things. And then you could, take what works with you and, disregard what doesn't. But at the end of the day, it's focused on getting you to where you're trying to go, independent-wise. Reyes, I hope I'm saying your name right. I don't do this every day here on YouTube. I do it every day with my private group. I do this twice a week here on YouTube for free, because I know that some people can't, or maybe are just not interested, or just don't need the help that's provided on like one-on-one basis or everyday live trading. But yeah, I do this every day, but it's basically with my private group, and I do it twice a week here on YouTube, and I mainly do it on Sundays and Tuesdays. I didn't do it on this Tuesday, so I just moved it to today. So yeah. So yeah, I do this twice a week here on YouTube and every day in my private group. So again, I'm not sure why the markup went away. Maybe I go to a different thing. Wait. Oh, it's on the S&P. Whoops. So again, we got that previous day's high. We did just take out this liquidity. So let me actually put an anchor there, kind of see what happened here. So we got SMT here. So that's definitely something we can't not look at. So I can say if this SMT leads to this, getting below this low, that's going to put this as a candidate, right? It may be a candidate to get swept here. But again, we have the high, low, higher high. So that delivered a market maker buy model on that lower time frame. This one did too, right? The small lower movement to go higher, that created a small version of the market maker buy model. If you zoom in, you can see the components: consolidation, accumulation, reaccumulation, smart money reversal, right? We got that first distribution here, and then it just accelerated because, it is a pretty small time frame. Doesn't have to do two accumulations and distributions. But again, this high to that low, because that is the case, this little block of price delivery here, because it has sell side and buy side, and it's got a displacement through that high, this should be treated as a BPR, assuming that it's going to keep going higher, right? If it's not going to go higher, we're going to see this type of thing get traded through to the midpoint. And then you can also flip this to, instead of a buy model that's continuing, to a buy model that completed, that went down to a sell model off the heels of this SMT here. And again, all of this context is working inside of the fact that this 4 hour has a huge displacement. We're in that upper 25% of that fair value gap. And price, it's kind of hanging around that upper 25%, which is ideal if we're going to continue to go higher, because there's really no real necessity for it to come down into this, right? It's got sell side over here, displacement at that, and then displacement here. So that's in itself, should reasonably be looked at as a balanced price range as well, if it's bullish, if it's exceedingly bullish. If it's not so bullish, and we may, sit in consolidation, or, they're just unwilling to give us that follow through, then they may look to try to dig down. Maybe they want to scoop up a little bit of these stops before they do unload. But again, we do not whatsoever want to see this breach the 50% of this level here. We do not want to see it get down there. If it does that, we have to reevaluate. But at the moment, we have stops taken, like we were talking about throughout the weekend and every single day this week with my private group. This wick here, it was respected. We got the down movement, up movement. This whole area should also, like I just said about this, be a block of balanced price delivery if it's going to keep going higher, right? These are things you want to pay attention to as price is moving in a particular direction. Because if that's the case, and we are going to be bullish, and this is a true statement, a true tactic, that's like really what's going on, we should still continue to see this hold. And again, we do not want to see it come back down below this midpoint of this fair value gap, okay? It could dig a little further, right? It could go a little bit deeper, if it did choose to do so. But ideally, we don't want to see that, right? We're vetting how bullish price is. It looks like we're very bullish. We have respect to this wick here, right here. And once it displaced, we got above an order block. So that's a secondary change in state of delivery from this one. We have this down delivery. I believe that's a part of a weekly order block. Yeah, that big wick. See that respect to that? Right, this low here is inside, I believe, this here. That's the respect to this wick here. So from time frame to time frame, it's showing that it has more so an interest to be bullish overall. This huge displacement, though, an external range liquidity raid, has now triggered a response to internal range liquidity. How far does it want to go, right? Well, again, we vetted that with this 4 hour fair value gap, and what we want to see it do if it's going to be exceedingly bullish. It's going to have to stay above that upper 25%. And if we can achieve that and price can displace and start to leave lows like this and respect the overall context that I've laid out for you guys, we're still bullish. I don't care what lower time frame level gets taken, because that doesn't determine what the bias is. Lower time frames have context from the higher time frame that allow you to have clarity on these lower time frames. The lower time frame doesn't decide anything. It gives you early signs that what's happening on that higher time frame should either continue or get invalidated. That's a fact. But you have to couple the lower time frame observations with what's happening on these higher time frames. If you do not do that, I'm telling you right now, you're gonna fail. There's people that are flip-flopping all day long, like they can't decide what to do, they can't stick to a narrative. And the main thing is, if you ask them about their process, they rarely or barely even check the higher time frames. They don't have a real understanding of, the importance of the higher time frame. But that's where ICT spends the most time, which he has said himself, and that's where we spend the most time. Because why are we going to try to do something different than what actually works? right? You prove that this works by watching someone like me or anyone else that has this perspective and shows it, or you just do it yourself, right? You take the advice and then you go do it yourself, right? The information, you go and apply it, and you see quickly. Every Sunday we do a higher time frame analysis. Literally almost every single week we're correct on where price is going to go. That's not a surprise. It's because we understand what we're looking at on the higher time frame. So then when we take that to the lower time frame, I mean, the result is spectacular, And if the lower time frame looks like a tornado like this, which it's a shit show, right? It's insane. When it looks like this, what do? When in doubt, zoom out, right? That's one of the best slogans I've picked up over the years. ICT says zoom out, 1 to 2 time frames, but make sure that you have the higher time frame understood, right? Or at least being referred to, right? Look at the higher time frame levels. What liquidity has been taken? In this case, you see previous week's high was taken. So what happened as a result? It was displacement that ended up taking that. So the next day, what did it do? It retraced a little bit. How far should it retrace? Well, if this fair value gap is going to be something worthwhile, and it's going to be exceedingly bullish, the best thing that we can see is if it stays inside that upper 25%. It's the same thing as well if we're in the lower time frame and price is trading into a fair value gap or an order block. It's the same stuff. Just imagine this daily chart or 4-hour chart was a 1-minute chart. It's all the same stuff that we're referring to. There's just very particular things in terms of time and macros and stuff like that on the lower time frames. That's a little bit of a difference. But everything else is the same. Whatever I do on this lower time frame, I'm going to do on the higher time frame, and vice versa. It's just one takes longer and it has more of an impact on the narrative, like what's actually going on, and one is more for precision and intraday near-term liquidity as the higher time frame unfolds, right, to that particular level we're looking for. Does that make sense? Let me know in the chat if that makes sense. Good morning, Matt. Dior, welcome. Yeah, okay. Oh yeah. If you see that there's like a fib or something that's upside down, it's because I just wasn't really paying attention. I'm just getting the levels, right? I'm not really too concerned about plotting something real quick to see the 25, 50, and all that. Even if you flip it the wrong way and it says 25%, 75%, and it's the opposite, it's still the same tactic. You know what I mean? But yeah. I'm not sure where you see that, where I did that backwards. But again, it's kind of like arguing semantics. Doesn't really impact anything. But yeah, let me see. Reyes. Okay. Yeah, Mike. You know the vibe, Mike. That's like constantly burned in your head. Small ranges lead to large ranges, right? And that's what we're seeing here. Large range, small range comes after. Large range that took external range liquidity, your automatic thinking should be, okay, well, where's internal that it's going to reach for? And then once it tags that internal, right, you could then start to consider when a change in state of delivery happens, if you can gauge like something like we've been talking about here, that's a good timing tactic, right? If you get a large change in state from at least the 1 hour, at least that's how I do it, off of a retracement that you're seeking a continuation from, when you can at least get a 1 hour change in state of delivery that's aggressive, you could then start to consider getting back in line. Otherwise, as price is in that mode of retracement, you got to calculate where it's going to go, right? Where is a logical level? In this case, we painted out the idea for this. We want to see it stay above the upper 50%, but preferably if it's a really aggressive buy-side delivery that's going to continue, we need to stay above that upper 25%. And we see that it's doing that right now. It's just doing a lot of chaos right now. But again, I would like to see the highs get taken. We do have this SMT here, like I pointed out earlier. Okay, so maybe it looks to use that to then come and sweep this out a little bit. Even if it does do that and gets down to this London low, it can also we'll still be inside of the upper 50%. But again, the line in the sand is this 50% level. If it breaks that, we have to readjust. Okay, so we're going to stick to that. There's nothing in here. If you're thinking like if you're very antsy to get into a trade right now, there's absolutely nothing in here to be too excited about, right? There's like a zero. Maybe it holds here, maybe it doesn't. But how are you going to be able to tell? We're in a mode of consolidation. We're ahead of CPI. We're not even at the open price yet. So what does that mean? We're in overall manipulation most of the time when price is trading pre-market open, right? That's just the characteristic that generally takes place. So if you catch yourself correct on the day for bias, but you're losing and your trades are before the 6:30 because you're maybe too overzealous, you're trying to not miss the move and you want to get in early, that's going to be the reason that you're taking those losses. If you're still correct by the end of the day or what you assumed at the beginning unfolds, a very easy fix to that for the most part is just waiting for the moves after 6:30, preferably after the first 30 minutes of that open price, 6:30 a.m. Pacific Standard Time, right? Let yourself get into that silver bullet, that new 4-hour candle that starts at 7 a.m., then try to figure out what's going to happen. Because then again, you can take advantage of a brand new 4-hour candle, right? If you can think about it, if you can catch like the low of a 4-hour candle, or at least close to it because your narrative is correct, or at least in like the lower portion of it, if you're bullish, or the upper portion if you're bearish, which again, that happens at 7 a.m. Pacific Standard Time. You can imagine that there's volatility that you can be a part of that's really amazing. And you're letting some of the data print. You're letting the gamblers get wrecked and reset their accounts while you're putting yourself in the best position, right? Like a sniper where the wind's perfect, the time is perfect, all your targets are just aligned, right? And you just had to wait for it. Versus you taking a shot too early and everyone scatters. And now it's like, shit, how do I, what am I going to do now? Now I got to wait even further. Or there's maybe more people there, right? Like more crazy volatility, so yeah, this is definitely an issue that is very common, at least when I work with traders over the last 4 years now. It's one of the main ones, plus over trading. Like the over trading thing is it's incredible. We think that more trades when we're just starting out, more trades equals more opportunity. The reality is more trades may sometimes give you more opportunity, but most of the time, pretty much all the time, it's more risk. And if you're taking more than 1 to 2 trades a day and you have a set risk, unless you're calibrating your lot size or contract size to accommodate for that many trades, like if you're risking 1%, how are you going to stay below 1% if you're taking 10 trades? And maybe you're not even considering dropping the risk. How much are you really risking? Right? If you don't accommodate for this, right? Now, I always teach that 1 to 2 trades a day, so that it totally neutralizes over trading. But then also, if you have like 1% risk, start off the first trade with 0.5%. And if you must take 3 trades, right, you can split it up into 0.25, 0.25 to get that full 1%. If you want to expand your amount of trades to 3. But that's how you want to calibrate things. If you have 1%, risk 0.5% for each setup. So yeah, we're getting above this high here, so you definitely want to pay attention to that. We got a failure swing, so we got low, high, failure swing, blast above. So this is also an order block, but it also may, if it continues to hold above this little level here, say it doesn't blow out that, this can end up being looked at as a mitigation block. It's also a wick in there, so. Actually, let's make it the larger wick there. So you could see that, right? So if it gets above that, it's still a very nasty condition. It's not something that I'm willing to put any real money behind. And we did just take this liquidity, but I'd like to see something that's a little bit more pronounced. Look at the 4-hour where we're at. It looks like we've done a lot here on this 1-minute chart. In the grand scheme of things, we haven't really done much, right? I like these big time frames. I want to take positions that are in alignment with something that is proving that it wants to go higher in this instance from this 4-hour candle, right? This 4-hour perspective. We have this wick in here that may end up being significant. We have the midpoint there. You see how the bodies are respecting that? That, in my opinion, is, a pretty decent sign that price may look to continue. So we'll see. But again, we're still in a consolidation, right? It's given some life here on this lower time frame. And we are kind of watching this to see how it reacts. If this is respected here and then it displaces above this high, I think this order block that would be created as a result of that could be something to watch. We do have a failure swing here. Again, it is treating this as a balanced price range, as I told you guys about. So we got to keep tabs on that. It's trading down into this down movement here. This is a fair value gap, I believe, from what time frame? I think it was from the 32nd. Yeah. So yeah, it's from the 32nd chart there. So yeah, we're watching when price trades into a PD array, what are the bodies telling you, right? If this is an order block, right, or just a move that should be a balanced price range, right? It's high, low, higher high that was created. If that's what it's going to be and it's going to support you, the bodies of the candles should not get deep into it. If it is doing that, you need to consider something like this. But when we trade into a PD array, it needs to hold on a body basis above the 50%. The wicks can go through it, that's fine. The bodies tell the story when you're trading into a PD array, whether it's a wick, a fair value gap, an order block, or any other PD array that ICT talks about that you could frame a model around. When you're reading order flow, you got to watch how the price action currently is communicating with these different PD arrays. So yeah, let's actually move up a little bit. Kind of see, let me move this. Okay, so look, we got this down candle here. The little red lines in here that we mapped out, that was from the lower time frame than this one. So I would much rather prefer to identify or observe some of the stuff that's on time frames that are above. I just use a seconds chart for like deeper context and execution precision. My frameworks most times come from above the 5 or 15-minute chart. Sometimes we catch little scalps that are native to those lower time frames, but for the most part, if you could do this and keep this as a perspective, it's yet another tactic that makes you stop getting into shitty trade setups because you have a higher time frame perspective relative to those 1 minute or 30-second charts. And if you could just use this framework for whatever model you use in terms of time frame alignment, and then execute on those lower time frames, say it's doing something like this. I'd say this is your model, right? Run on stops, shift, fair value gap. Well, once this 6 or 7 or 5 or 15-minute or 1 hour setup begins, say it gets into that, once it tags that and you're in a level like this, then you drop down to the seconds chart, because then you have that deeper context to then frame out if you see the model that you operate with on that lower time frame, like it gives you a little version of whatever it is that you trade inside a low like this. It's so much more powerful. And if you can catch this inside of a macro when it's doing all this, when everything comes together, I mean, you can imagine that your trade setups would potentially be a little bit better, right? I go out on a limb and say that they would 100% end up being better. Doesn't mean you'll be profitable, because you still got to hold the trade, manage the trade, and no one could do that for you. But this definitely puts the odds in your favor a lot more, right? And if you could take it from like these time frames and take it up to these time frames, and you have all the time frames working with your setup from say the 5-minute or 15-minute chart, I mean, can you just think about how that would make things more beneficial, right? Wouldn't you say that probably sounds like a better idea than getting like pip drunk on the 1 minute or seconds chart, getting thrown around by every fluctuation? Isn't this just like a more clean way of thinking about how to do your analysis when you try to determine an opportunity? I would say so, right? If this is your first time hearing this type of perspective, I encourage you to investigate, right? Because it's something that could really change stuff. Just those little simple things, simple mindset adjustments that could do wonders for what it is that you're doing. It minimizes stress. It puts you in better position, right? And then, of course, you have to carry it the rest of the way. But, it's one of those things. So, again, you can see how nasty this is. I'm not interested in any of this, right? If you're like chomping at the bit, like I said, like slow down, okay? So wait a minute, right? We're not even at 6:30. 7 o'clock's going to come, right? We'll see what that 4-hour candle can do. we're in a current 4-hour candle here. So this 4-hour candle is happening as a result of this wick and fair value gap being traded into. The upper 25%, you see how sensitive that is, right? We mapped that out a second ago and yesterday, right? You see how sensitive that is. It's in the middle of that upper 25%. So it can't even close below that. We're in the upper 25% of the upper 25% of this fair value gap. And it just refuses. Look at it. It's refusing aggressively to slam through. Can't you imagine if it was really, really bearish? It would sweep down there. You know, maybe it happens later, right? And then takes this low and then goes. That's what my expectation would be if it does, you know, decide to break down below this. Like this little move here, if it does reject and gets below that, again, you just see that happen. It's telling you from these larger time frames that it's unwilling to hold this as a balanced piece of price delivery, which it is. It's holding it. So, you know, up to this point, the analysis has been correct. But if that was to fail, then again, you have to just adjust. Does this breaking down below this lead to the overall narrative being bearish? Maybe short term, right? Just to simply target London's low. But in the grand scheme of things, we're rooted in this. It's a retracement after external was taken to internal to now try to anticipate external range getting taken out. That's what I'd prefer to see. And that's what our position is today. Okay, and then again, you look at the dollar, it looks like it's still hella heavy. We got these equal lows here. So that looks like a pretty delicious target. Whoops. So do you guys have any questions about anything? Sorry, I kind of just like went on and on, didn't let you, I'll give you guys a chance to ask questions. We have 15 minutes until the open as well, so we'll see what happens. Ow. Freaking banging my freaking knee. Sheesh. All right, for sure. It doesn't look like you guys have any questions. Did I miss any? Okay. So yeah, dollar's continuing to drop. Looks like the currencies have now, off this SMT here and this quarterly wick 50% level, we had a change in state of delivery. One here and then a second one. This turned into a propulsion block. It's an order block within an order block. A previous order block's body created the order block inside of that range. So when it broke above this, the midpoint here, if we were looking at this to trade something off of, a retracement into that should be expected to stay in that upper 25% of that order block too. And that would have further confirmed on a closing basis, the price is going to keep going higher and targeting this. And you could see that, you know, it's pretty much done that. So, you know, this is the response off of that really aggressive gap in the dollar. This is all a response to the war in Iran, how things didn't escalate. So it seems like they're de-escalating. So de-escalation of tensions is a good thing, right? It's going to make these things rally. It's going to make the dollar decline, though. We talked about the dollar, where it's at. It's in that quarterly fair value gap. It's in that also quarterly breaker, quarterly order block. And all price did was reach into that, kind of sweep some of this up here, right? The quarterly fair value gap in the previous quarterly high. Well, previous monthly high here. And then it just rejected aggressively. Now we have one change in state, and now we have a second change in state. It gapped through that. That is super bearish. Okay, and now we got these equal lows. This whole run up is just simply a retracement. We had accumulation on a quarterly perspective, manipulation above the high, hit I think a monthly fair value gap. We talked about this last year, and then the market maker sell model delivery. We have return here, return here, return here. If this quarterly perspective was a 5-minute chart, you would be thinking that it's going to go lower, would you not? Or would you just all of a sudden assume that you're going to pick the low here and it's going to target the highs? For being honest, right? It looks like this was just a accumulation, manipulation, distribution, rebalance, and now we're in the redistribution phase potentially. That'll be deeply confirmed if we could break the low of this candle, because that'll then be a single change in state and a second change in state of delivery, and a power of 3 overall idea, while it leaves this upper portion of this fair value gap available. Mind you, this is a quarterly perspective. So if you can nail down something like this, you have a long-term perspective, and it's not going to change just because the 5-second chart does something. Okay, even the 1 minute. I'm trying to introduce this. ICTC. Order flow. Trading style. My question to you is, with all this going on, what are your odds to the market? What I'm not sure. It's kind of like really broad. I'm not sure how I would answer that. What are my odds in the odds of it staying around entirely, or like long term, what the perspective could be, like overall, like if you're position trading and you're like, okay, well, what's the idea? I would say it's a very volatile environment. I de-risked. I do trade long term as well as short term. So long term is retirement. This is cash flow for day trading. So my higher time frame perspective, long term, has been to focus on dividends, so cash flow, as well as de-risking until all this stuff kind of chills out. In good companies, I'll still load up because I know that like AI is what it is. There's data, compute, and energy. That's my specific protocol right now, long term. So those things I have a bullish direction, right? Data, compute, energy. So everything that has to do with AI, the infrastructure, how everything operates. But overall direction for like the entire market, everything's predisposed to go higher as long as things are okay in the world. Because there's war and all that, if it starts to chill out, I'm bullish. Like right now, I'm bullish on the overall indices, right? I think that we're going to have the same situation as last year where we picked the low. This wick here, right? We had to wait a little bit, kind of how we had to wait a little bit last year too. But I assume because the tariffs got taken off and it wasn't so aggressive, I just assumed that we were going to continue to bounce. And from that yearly order block I called out before the fact, we ended up picking the low of the year. So I think that in the quarterly fair value gap here, I think we're going to have a very similar characteristic. I think that we will be able to recover as long as the ceasefire holds. If the ceasefire doesn't hold and things start to escalate again, we are in kind of wild territory. So you got to expect that the uncertainty in the market is bad for growth. Doesn't mean that it'll forever be stuck. I believe in the U.S. economy, right? I believe in the U.S. stock market. I don't think it's going anywhere unless the U.S. goes down the tubes, which could happen to any country. But in my lifetime, our lifetime, hopefully, we don't see that, because that would be very bad for the world. Well, at least for Americans, and maybe the world, because there's a lot of people that are invested in this country. So, but overall, depending on the ceasefire, how that holds, the new Fed chair is also a reason to be bullish. He's going to come in, and I'm, pretty sure have something to say about a lot of things. He's Trump's friend too, so he's probably going to want to do what he can to get the stock market to go up and make Trump look good. So that's a positive thing for the U.S. The U.S. stock market. And I mean, you could already see that what the ceasefire did, right? If it holds, and just the mention of it started this rally. They had a 45-day ceasefire. Now they got an entire ceasefire for 2 weeks or something like that. So we'll see what happens in 2 weeks. Anything can happen. So it's still a highly risky environment. For now, though, order flow and the way that we do our analysis from higher time frame to lower time frame, it has proven that order flow for order blocks, fair value gaps, wicks, the relationship that current price is having on these PD arrays has now shifted from being exceedingly bearish, which is what our opinion was, to now bullish. And you also see it with the intermarket relationships, right? We see that the bonds look like they're holding a little bit. We'll see really what happens. But the bonds, depending on what this does, it has a positive influence on the indices and the foreign currencies. And whatever the yields do, that has a positive correlation with the dollar and an opposing correlation with the other assets. So This is also playing a role in that assumption of what I believe the narrative is. And we do this analysis from the higher time frame. So again, it gives you a big picture. So again, if things start to shift, right, where this decline turns into a rally, right, say it breaks this weekly breaker here, we'll see that influence bleed into the indices and the foreign currencies, and it'll push them higher. And the dollar will continue to fall lower off the heels of this really nasty gap in here. Okay, so that's kind of my overall overview opinion. Yeah, no worries, brother. Appreciate the question. Yeah, hey, if you have any questions, I mean, anything that you're trying to merge into what it is that you do, I'm not sure what your style is. If it's solely ICT as a purist or if you're kind of mixing things. But I'm pretty interested in hearing how you trade. If you do mix things, I'd be open to having a dialogue with you if you're open to that. And of course, I'm here to answer any questions too. Any way I can help, I'm willing to. So yeah, just let me know. Did I miss any question? You think it's a bearish breaker block move in price? No, PD arrays and anything technically is not what moves price. It's the algorithm and the invisible hand. Those are just like points in price where the algorithm refers to. Because if it's running off of an algorithm, it has to have data points that it refers to so it can build a story and go to levels and have responses and paint this picture that we're able to spot as we have for the last 4 years. Well, yeah, 4.5 years, almost 5, in the decade almost that I've been trading. You wouldn't be able to predict price really, and it wouldn't make sense if there was random stuff happening, right? So it's definitely not random. Even people that think it's random, that have a system that is repeatable, I mean, that alone tells you it's not random. You're able to spot the signatures that are being laid by the algorithm. Everything's digital too. There's no market makers that are in the back end punching price in manually. It's all automated since 2001. And there's a lot of articles about how they made things algorithmic. So ICT says a lot of things, and people still deny it, but the CME themselves has articles saying it's all electronic, algorithmically driven. So it's like there's really no argument, that it's random or it's not algorithmic. Like really? Just got to do a little research, right? But yeah, at the moment, the PD array that I think is holding price is this fair value gap. And again, this market maker buy model being a balanced price range. I think those are some of the key things. I think that also, if we go to this weekly, go to this weekly chart here, we could see how that wick there, right, this order block, it's respecting. And we got all these wicks in here that have quadrant levels. So if you break down every single wick, you can get a lot of quadrant levels. And you'll see that prices, lows and the highs, where it retraces from and where it, stops and then continues. You'll see it paints like a grid in price, right? You don't have to do all that because it's a lot of lines and whatnot, but it's something good to do a study on to see and prove to yourself how important these wicks are. We do have this large wick in here. I do think that'll potentially be worth placing in the chart. So if you scroll up here, you could put like the eighths as well. Yeah, so that's one of them right there. Got an eighth level in here. Look at what price is doing on the eighth level. Right, that little light blue line. Bang, bang, bang. And then we got the next quadrant up here. This is all, again, part of this large wick. If it can break above this, well, this wick here, if it gets above that, if we're going to be bullish, we're going to assume that that's going to hold. We have the high, low, higher high. That turns into a bullish breaker. So this up movement here, right, from the low to the high, right, this here, you could drag that out. It should be very sensitive. Again, we got sell side, buy side. We have stops taken. Stops are being left in here, but it did take stops this is part of the 4-hour retracement into the fair value gap, right? I know it looks a little bit busy, but bear with me, okay? Actually, I think I could shrink that a little bit, huh? 313. Okay, let me get it there still. 13's close enough. Okay. So yeah, we got the little octant there. Beautiful. Look at that. Look how perfectly it respects those levels. I mean, it's amazing. Look at the bodies of the candles here in the 4-hour. You telling me that's random? Just randomly buyers and sellers agree 100% that it's just not going to break that level. Is that really what's happening? Absolutely not. Right? It takes more to believe in that type of stuff than it does to believe there's an algorithm that you could then find out the logic to and then try to trace it. Right? I mean, there's really no reason to fight it, you know. But people do. So yeah, so we're above this wick here now. So I will look at this as a level that price should hold. So we should continue if it's going to be bullish, right? We have inversion fair value gap. Got another one here. So drop down, inversion, so change in state of delivery. Then we got a second change in state here. And so price is now racing to the buy side. So this SMT here, because we're in a bullish trend, it was a bearish SMT, but that bearish SMT is less likely when you have the dollar going lower and the indices are in a clear bullish overall view. Okay. So let's see what happens here with this wick. So that is something that I'd like to see price stay above. So yeah, if we can get price to return into that a little bit, I think we can actually move up or down to the lower time frames a little bit here. Okay. Again, we got a potential, well, it's sloppy, but you know, this is potentially a market maker buy model. This was, well, it's part of the smart money reversal phase. And we got these equal highs up here. Again, that is the, whoops. It's the previous day's high. I don't know why it didn't carry it over. You know, aside from that though, right, we have the AM session high here. Well, that's actually the lunch high. And the AM session high is just part of the previous day's high. And we got the PM session high right there. So those are the next near-term targets to look for as we frame this continuing to go higher. Okay. I would have really liked it to give us some type of delivery down into this. 630 just opened up. It seems that they are ramming it through. So yeah, if we lose this low here, that's invalidation. And all of this will have just been a retracement. And then that rejection from this level, we have these relative equal lows here. And so then that'll be the contingency plan. So again, we have to stay above this green line here. Okay. At least up to the 50%. If it doesn't do that, and we see it like send a shock wave through the downside, and we get below this low, that's enough for us to then think, okay, well, we're probably not done with this retracement, and bullishness is just not quite ready yet. I do still think until the 50% here is taken on that 4-hour fair value gap, you know, we'll still be able to be bullish. So let's double check, Mike. Let's see. Let me see something real quick. Just double check and see, Mike. That's a good question, bro. Yeah, it called the buy right there. My indicator called the buy. Called one right there too, kind of chopped around. It's in consolidation. You got to use discretion. But yeah, the indicator, right? This indicator from my private group called the buy right there. Beautiful. Again, we've been thinking buys, haven't we? Isn't that what we established once it got above this high? Right? And then until it breaks through that, I'm going to keep that same opinion. What you see here too is a balancing of the regular trading hours gap that we currently have. Now my invalidation is going to be this low here. Isn't that awesome, Mike? Damn, the last couple of days has been pretty amazing, huh? The indicator runs off of what I know as a trader and the things that I teach here on this YouTube channel and in my private group. Specifically, my personal model called the Razor model. You know, it's got a bunch of things in the back end, what liquidity pools, how it seeks liquidity, you know, how it defines a swing high, how it defines certain liquidity, how it defines a valid level versus an invalid level, you know, many, many things. Many, many things. It's a lot of stuff that goes into an accurate indicator. More than I thought, that's for damn sure. So again, we got to see how this is going to behave. Remember, this is a 6:30 time. We are not going to really look for anything within this, right? This is pre-market open. This is not something that I personally would like to execute because it's pre-market open. Does it mean that opportunities don't show up? No, it's just outside my rules. Does that mean you shouldn't trade? You know, if you find an opportunity that's, you know, outside of the rules I talk about, no, it's up to you. It's the beauty of trading. It's a personal thing. You know, if there was not CPI tomorrow, you know, I may have been able to be a little bit more aggressive and think, okay, let's take that. But look, it was very short-lived. This is the behavior that we're dealing with, right? Pre-CPI. So again, once it takes out this low here, we got to watch and see how it reacts to that. And if it reacts to that aggressively by holding that level, and then we displace away from it, right? You could then take this low and then consider that in itself as a breaker. Okay, but we got to see, right? Let's see if it does this type of crap and stays above it, then that's going to be something that is not really trustworthy. But we'll see at the moment what it's going to do, okay? Let me see. Who programmed that? Well, I have some amazing students, so we'll just say that. It's not necessarily who codes it. It's does the logic you're trying to code make sense, and can it algorithmically be applied in the chart? I didn't flip the option to bearish, but look like the bias indication that it was using to seek setups. I didn't put the bearish overall view, so that's why I didn't spit this out. If I would have flipped the bias filter, I mean, it did exactly what we like to see. So it would have probably spit that one out too, if we wanted to look at it. But yeah. Yo, Mike, it's been crazy, right? Freaking indicator called out huge buy yet the other day. And like that huge run higher, it called that thing out. Now we just saw that it called this one out. It called this little move out. It called this little move out. It's wild, Mike. It's wild. It's better than I thought it would be, honestly. I wasn't sure. I'm not a coder, so. But the possibilities have definitely been amplified. So yeah, it's going to be a perk to being part of my private group. If like the month-to-month option, you're going to have to be there for 6 months to get access to it. Or if you go with a lifetime, you'll have access to that. So that's how you guys will be able to get access to it. So why not trade just the indicator? Because I want my hands in everything. And besides, we just started creating the indicator. I've been planning it for almost 6.5 months. But regardless of having an indicator or not, it's going to be used as a tool for me. it hits at a great percentage because it basically is my brain inside of it, and I, you know, prove that I have a pretty good track record. Um, but I mean, it's to each his own, right? Whenever people get access to the indicator, they can use it in whatever way they'd like to. But I personally, I'm a very, very, I want to see price because discretion is still going to be needed. Indicators can still be wrong. They're not going to be 100% of the time. And the question is, are you going to be able to deal with the losing streaks? Are you able to deal with losing streaks in general right now? If you put it all into an indicator, if you're going to kind of mess around with it and exit early or, whatever the case may be, you know, the discretion is still going to be needed statistically. I mean, you can, right? It's hitting high 65% strike rate. So if you just take every single trade that it spits out, as long as you're not breaking rules, you're not over trading and taking stupid trades. What tests have you done? So the tests have been done with one of my students' backtesting engine. He coded an engine that backtests a particular setup or algorithm tens of thousands of times through massive amounts of data. And of course, I have my own study that we're still continuing off my own view. And then also I have some students also doing the back test as well. Again, it's still in the production phase, but we're making massive progress. And I'm not going to allow it to be released to the public or anyone in my private group until it's at least above 70% across all time frames. 65, 70% on all time frames. We're there already. We have, 71, 78. In some days it's 81%, right? We're well beyond the 40% ceiling that we hit when we were first coding it. So it's all a process, you know what I mean? And it takes a lot of time. You don't want to give someone a thing that doesn't work. You know what I mean? Yeah, see, you say that I can charge thousands, but I would not want to do that. There's a reason that my access to my private group is cheaper than everybody, even though I know statistically and from what I prove publicly, I'm better than a lot of people. I'm not the best, but I'm definitely above average. And I could charge $10,000 for me to mentor one-on-one too, given what I showcase every single week for years at this point. But I want it to be accessible to everyone. I'm here to truly help individuals succeed, or at least get to the point where they can do it on their own. Because I can't guarantee profitability. No one can, But it's yeah, it's something I don't really like about the industry. I mean, me myself, I've had to spend thousands of dollars on mentors, and it's just like I'm glad that I did it, and it was worth every penny because now I have solid relationships. It's more about relationships than anything else, and being able to have access to that person that can teach, and if I have questions, I get it answered automatically. Mike's in my private group too, right? Mike and probably a couple others that are on the call right now. They see what the vibe is. We do this every single day. It's amazing. Mike is doing very well too. Started with me last year. Absolutely amazing. Mike, when you took that $2,500 withdrawal, how long were you here with me working in the private group? I can't remember. Was it a year? Were you over a year? Are you over a year yet? I can't. Time's just flying, dude. Credentials? What are you talking about, credentials? You talking about like my experience? Is that what you mean by credentials? I'm assuming that's what you mean. Yeah, well, I have this year 7 years experience trading purely ICT concepts. I've been profitable for 4.5 years, full-time trader for about 4.5 years too. So three years of struggling like everybody else does. Then I invested in my mentors and my whole life changed. And that's why I offer being a mentor, because I know how important it is to have a mentor. It speeds things up. I would have struggled even worse if I didn't have, someone there to at least help me. Like, tell me that what I'm doing, even if it's a mistake, tell me that it's normal, right? Tell me what's not normal, what is normal. How do I improve myself as a person, but also as a trader? What do I do about these things that I am doing to myself? You know, I needed that help, and it was I'm not a very technical person. You know, I'm not like a computer coder type of person. Watch this first presented. That looks like it's a very nice response. You see how price is really reluctant to get down there. This is still telling me that there is still life and a chance for us to keep going higher. This is all still happening inside the upper 25%, right? And going back to the credentials thing, in terms of, you know, me being a mentor, I've been mentoring for about 3.5 years, over 170 students, a lot of which have been allowed to, or they've all been put in a position to be able to go and walk on their own. Some have stayed because they like the environment. Some have got what they needed and left. I still have a relationship with them though, but and a lot of them aren't even on social media anymore. They're like, dude, honestly, let me just go live my life, which I think is the right thing. Unless you have something worth listening to, and you know, you're willing to help. So, what's your best return? Well, my best return in 1 year has been 76% in a year. That was 2 years ago. I have very, very large accounts. Let's just say that. I have 2 personal accounts, one for long term, one for cash flow, day trading. I have a long term portfolio as well that's not actively traded. It's managed like a person that's managing an account. So I make it very clear that my personal amounts I do not share. If you can't take what I show publicly every single week and in my private group every day and put 2 and 2 together, then that's going to be your issue, and you can go watch someone else. But what I show here keeps you focused on not me personally and what I do and how I live my life, because that doesn't help you. And what I'm doing doesn't mean that's going to be what you're going to be able to do, because I've been doing this for 7 years and I don't know how much experience you have or anyone else. You know, you can't encapsulate 7 years into, you know, one call or, you know, just a little bit of time. You know, just because I'm good and prove it doesn't mean that, you know, you're going to be able to be good and use it, because maybe you lack discipline, you know. And I do have receipts. I actually took a funded account and I proved it through the dashboard. If you go and dig into my free community, you see that. Okay, I do show my trade executions. I have an AMP Live account, right? I do all these things. Oh yeah, I do back it up. I show you every single day. I show everybody every single day what it is. We get it right pretty much every day. I'm assuming this is like your first call that you've hopped on, so I can understand the questions. Yeah, look, Mike. Again, Mike. Many students have been here in the call right now. They've been here for so long at this point, and they just say, "See it." And if you can't put 2 and 2 together when I hop on, like, think about it. I called bullish bias today. Was I correct? Have I been correct the whole time? Pretty much. Have I said anything about a short? Have we been correct? Has it targeted all the levels that we've aimed at? Right? Has it reacted the way that we've talked about? Again, over and over, right? So, you know, I push students to find their own model, right? I do call out setup sometimes, a lot more so in my private group. But here, right, it's all about learning, right? Are you trying to be independent or depend on me, right? So yeah, this high to that low, we got a sweep. So this up candle here, I'd be paying pretty close attention to that. I'd really be curious to see how this holds in here. Again, we're at the upper portion of this 4-hour fair value gap. So once we get into 7 o'clock, if this is where we're at, I think that we should get some energetic price delivery. And then we got this up here too, this target, one of the main targets for the day. Okay. Eddie, are you here to learn, or what exactly is, I'm kind of confused. So you said you got banned from some other person's live call. Were you doing this like just absolutely kind of screaming, right? That might play a little role in probably why that may have resulted in the way it did. Sheesh. Yeah, let me see. Let me see. So yeah, let's watch this again. If this is going to be a useful breaker, the midpoint here, it's going to have to be respected. So we'll see if we can get this to respect and not even come back to this midpoint. We're above the regular trading hours gap too. All right, we got the stop hunt right there. Right, a little baby peak below that. If you remember back where this had the balanced price range, notice how it worked the top of that, the upper portion. So let's see what happens. We got a down candle here. If we get a displacement above that, I'll classify that as a change in state and a respect of this breaker. And again, you want to pay close attention to how it behaves in here. And we'll see what happens. It's still a very, very choppy, nasty day. It's opening up a little bit, but pre-CPI can give you a lack of follow through. So expect that that's what it is. All right. Well, not sure what your intention is, bro, but let's do that real quick. Yeah, exactly, Mike. People can fake receipts. So yeah, is what it is. I mean, tell those people that have receipts to come out and prove it live every single day that they know what they're talking about. Tell them to come and do that. Pretty much none of them do. So. So yeah. Do you guys have any questions? Again, let's watch this real quick. Let's see what happens. There's no trade setups that I'm interested in here, except this. If I was paying attention and wasn't paying so much attention to the chat, I probably would have called this one out for you guys to look at. That's a first presented fair value gap here. Wait, let me double check real quick. Is there a wick in there? No. So yeah, keep your attention on this. If we can get above this, like I said, you're going to want to watch what's happening in there. Yeah, what's up, Jen? Yeah, no worries, Jen. Appreciate you guys being good students. That's why you guys get results when you come here and watch what we do. While other people would love to have me shove a Lambo down their throat and give them my address and my bank account numbers, you guys are here for the knowledge. And you go and apply the knowledge, and you see us do this every day, and you do this every day. And it's a wonderful thing to see. So yeah, we're not getting that response here. So I would not be looking at this at the moment as anything to really look to engage at the moment. So the qualifiers are being pushed away here. Let me pull dollar up. So yeah, dollar still, let me get that so you guys can see it. So yeah, dollar is here, right? Showcasing. It's going to keep going lower. I mean, this is nasty in here. This is super deep retracement. It was choppy. It's taking buy side. Now it's rejecting. We're back to the midpoint. So if we flip this regular trading hours gap, you definitely got to be cautious if you're looking for buys at all. We had this little midpoint there, so it's really contesting that. Again, we still got London's low here, so this may be a time when we have to make a slight adjustment because it may not be done trying to take out this 4 hour here. But again, in this 4 hour chart, does that look like a clear picture to you? It's sideways. Does this look clear to you? Right? It did take the high. You can make an argument here that this is now a shift in market structure. We're back to this first presented. If it inverts that and gets below it, any return back into it may be used as a catalyst to target London's low. So yeah, the initial buy there, right, from the indicator, spit it out. That was a good one. It was very short-lived though, right? This is the risk when you trade pre-market open or within that first 30 minutes, right? We're just now getting into a macro, right? Mike said it's all on channel anyway. Proof is in the pudding. People can rewatch it endless time. Yeah, exactly. Exactly. No, but that's the thing. Not everyone will be convinced, and I'm not here to convince anybody. Yeah, I'm not the best trader. I don't say I am. I'm good enough to not need a job. But I'm not coming out here saying I'm making millions and millions of dollars, right? I'm not that heavy on risk. It's easy to make more than I used to make working my full-time job, which is enough for me to live, right? And I could live here forever. I don't need a Lambo. You don't either, right? I mean, if you want that, obviously you got to plan around it. Your risk exposure or size of your account is going to have to be huge, and you're going to have to be able to sustain like $1,200 oil changes, and your bills are going to explode. If you're trying to live this super materialistic life versus living a normal life and not needing a job. That's the biggest flex out of anything. And if you're trying to impress other people, I mean, that's your own prerogative, but you're going to have a pretty stressful life trying to do that because not everyone's going to be impressed, So, yeah. So now with this flip here, like I said, if it gets below that, that should offer something useful to then watch a move lower. We got equal lows here too. So this is a strong rejection showing that it's not willing to go higher just yet. It tried to, but it failed. So now everything is now shifting to us trying to consider the London low here. And if this comes back into the range, I'm not interested in touching this at all. It's not worth being touched at all. In this instance, we took the stops. It's rejecting up here. We have a failure swing down here on this 4 hour. We got a little bit more of a gap that we could dig into. Preferably it doesn't do that because that's what tells us that it's heavily bullish, right? But if we can get this inversion like we just did, notice the quadrant levels, 50%, 25%, 75%. The body closures now from this point down to this low, or this low, whatever it chooses to stop at, should close below it, and we should see speed because now we're inside of the macro. Okay. So let's see if we can get that. See if we can get that to move like that. Okay, remember, it's very, very, very volatile environment, very low probability at the moment, very choppy, pre-CPI delivery. So just keep that in mind when you're calibrating your risk protocol. But yeah, let's see if this thing could be interested in exploring some of the sell side down there. So yeah, let's see if it can continue to hold. Remember, all you need is 20 to 30 points. So either there or there. So yeah, this is going to have to hold below this first presented fair value gap. If it gets beyond that, that's a problem, right? And that wouldn't be something that would be worth dealing with. So that's invalidation there. Again, very low probability situation in here because of the price action. Doesn't mean it won't work out. But again, I emphasize this so you manage your risk properly. You don't put 5 contracts in a condition that's like this. It's just not worth it. Maybe it does work out, maybe it doesn't. but you don't want the if it doesn't work out element, because it's choppy right now, to end up draining your account a day before CPI, and then maybe you blow it even worse tomorrow because it's CPI, and you hurt yourself before the craziness unfolded. You know, this is all pre-CPI, so they're building sentiment. So wouldn't it make sense if it is overall bullish for them to build sell-side sentiment, so then when CPI comes in, they can explode it to the previous day's high up here? You know, because it's going to hit one of the extremes. CPI is not anything to play around with. So, yeah. So it did end up offering that 20-point move right there. Maybe a little more if you caught it pulling up into that. Again, if this doesn't make sense to you in terms of your model that you use, you got to consider that there's just nothing for you to trade. Right? So, yeah, given the characteristics in here, I've been unwilling to touch it. It's too vicious. This is seek and destroy, right? It's got zero follow through. Now, we'll see what happens here. If this trades into this, again, we cannot break this high here if we're going to continue to trust it's going to go lower in anything, you know, worth trading, right? You know, I would honestly, for me personally, want to wait to see one more change in state here, because we broke down here. So we got accumulation, manipulation, distribution. It's retrading into this. So if we can change state of delivery below that low, and we go into a brand new 4-hour candle, this is what the previous 4-hour candle did. It set highs, took buy stops. So the next 4-hour candle may be used to energetically get us back down below this logical liquidity pool down here. And again, this should act as a bearish breaker if that is in fact going to continue to go lower. Right? So that's what we're watching right here. And again, we only had one news event. Oof. It was lower than expected GDP. That's not good. That's not good. So yeah, I'm waiting. I want to see what this does here. Got that stop run. See how it treats this. Notice the bodies in here. Remember what we talked about earlier? They're staying below. So if that continues, you know, we still have a likelihood of price getting down into this. Again, we are in a very low probability condition. You know, ideally, because we've went this far down, you know, we could try to explore this a little bit. But again, this is counter trend to what this overall narrative is. It's bullish. So this is a retracement, scooping up sell side liquidity, accumulating inside this PD array here. It's not invalid to go higher yet, right? So, but the 4-hour looks like it's not necessarily ready to continue going higher yet. So we got to put that on the back burner for a little bit. But yeah, like I said, let's watch this here. See what it does in there. So once it takes that, the next candle that comes into that, we should expect that it's going to hold this. And then maybe we can explore going down here. That's what I'd like to see happen. It's the 1 minute. It's also on the 2 minutes, got an order block, 3 minute, 4 minute, 5 minute. Uh-oh. Let me take that off. The hell is it showing like that? So yeah, you see the bodies here on this candle. Order flow is still showing us it's interested in exploring downside. So until that's upset, all of this is a balanced price range. Okay, we got this low to that high, right? Once it's below that, take that low all the way to the high, 50% of that. Until we get through that, it may look to continue to explore going down here. Again, we got that new 4-hour candle forming now. So you could see that here. So let's see what that results in. Okay, let's see. We did explore the lows here. I want to see what that reaction is going to be right here. Okay, we got the other assets. Yeah, there's a huge crack and correlation. Very low probability for anything to really unfold here. See, it's a little bit just nasty. All right, but look at the bodies there. Again, we just simply need to see if it can try to explore this. Because it's bullish overall in that 4-hour chart, on the daily chart, on all the higher time frames, we do got to watch the characteristics here, right? It's the open price. You know, a lot of times they run down when the higher time frames say bullish. At the start of the session, they run down, immediately get us below that open price from overnight. And if they're going to continue to be bullish, it'll explode from this level. And again, if that happens and it breaks the midpoint up here, that's how we know it's time to go bullish. And we may be back in line. Right now, though, again, everything is supporting this going lower, at least to this. And until it's proven otherwise, you know, we'll see what happens. We do have the crack and correlation, right? Lots of just nasty low probability, right? The Dow looks a lot cleaner than all the other two, but you know, we'll see if that changes or not. But yeah, look at what type of ranges we're trading in on this 4-hour. You know, it could just stay in this range. It's pre-CPI. So yeah, this right here turns off my interest to even think about engaging. We could not get price to close below this order block. So any, you know, real opportunity, it was not offered, at least for the way that I view things. And we'll see what happens. Again, this comes back into the middle right here. I'm not interested in touching it. You know, this alone has already kept me on the sidelines, all this nasty price delivery. This was reasonable, but it was very short-lived. This was reasonable, the thing that the indicator threw out, but it was very short-lived. It's been a lot of that today. Give and take, give and take. That's how you know it's low probability. And you can see that the higher time frame is sideways. So it's low probability, right? Does low probability mean you can't take a trade? Absolutely not, right? You could take a trade, right? There's trades that were in here, right? Like I just pointed out, right? There's that one, depending on what your model is. If you had an opinion for a short, you know, for whatever reason, right? Maybe you wanted to target this low here. There was a low here, a breakdown, right? There was a breakdown here too, so that's a shift in market structure after a stop run. Fair value gap, that's 2022 model to go short. So it just depends on what your model is, right? But regardless of what model you've used, you know, look at what's happened. It hasn't gone anywhere. Where has it headed, right? Well, what has been the overall objective here? It's to wipe the board on both sides, right? And if you get beat up in something like this, is it really rational to attack your skill set over that? I know for a fact I'm going to get 1,000 messages today that, you know, they blew their account or they overtraded, they just shouldn't have done it. It happens every time price looks like this. And again, no trade's been taken today. There's been none. There's been consideration of this one, right? There was consideration here. It did offer 20 points, right? We talked about the first presented fair value gap in there. It did offer a 20-point run, you know, from here down to that low. But are you able to take that 20 points and be satisfied? Or are you trying to hold it? It's so aggressive in here. It's going to run 1,000 points. You know, knowing that's low probability, are you disciplined enough? Do you listen to the things that we teach here on this channel, that ICT himself teaches, to be content with enough? And when you identify low probability conditions, to really be content with enough? Right. Is your model in there? Did it make sense that you would have been able to be confident to take that short, given some of the stuff we talked about? Right. These are all questions that determine whether you're going to take a trade. And I'm not a signal provider, right? Just so we make that clear. You know, I lay out what I think price is going to do. I point out, oh, well, I think it's going to go here. You have to find your model. When it forms, I then tell you and show you my execution labels that I took a trade based on the things that I lay out. But I'm not licensed to give trade advice. You know, nobody is. And I'm surprised that more people don't get sued, because they very easily could. The CFTC just doesn't know about Joe Schmo on the internet with his following that he's acting as a trade advisor to. But it's just a nuclear bomb waiting to happen for most of these people. You know, all my mentors have said it. ICT has said it, right? Because they're smart and they've been sued before. So for anyone to come out here and claim that they are a signal provider, you know, you better walk a fine line, because all it takes is one person that thinks that you're telling them to get into a trade, which I don't. I tell you not to take a trade at all, right? Just watch what's happening. Learn how to read price, because that's what's guaranteed here. You get to learn how to read price. Learn what clarity looks like and how you can achieve it. And you go the rest of the way, right? That's just the way it is. People don't like that. Okay. You know, some people won't like it. That's totally fine with me. So I'm gonna still be living my life and not needing a job. So it's okay if you don't like it. And my students too, they're working their way towards that on their own, not because of me. So it's just the facts. It's just the facts. So yeah, let's see what happens with this here. Right, we've got this up movement. It's doing a whole lot of nothing, right? Typical seek and destroy pre-CPI delivery. Get everybody excited and pump the brakes. So what does that mean? That means that we're also pumping the brakes. We're going to wait. I'm demanding that if price wants to get down here, it's going to have to really show me. Give me displacement and a fair value gap. You know, turn this low, high, lower low into a breaker inside of this larger breaker, return back into it, and then maybe I'll be able to make a decision. We'll see. Oh, got dollar over here. I didn't realize that it was cut off. Sorry about that. You guys can see that gap. You see how DXY reached into that gap right there? How it's pushing away now? You have an order block there on the daily too. So if DXY gets below that, I think it'll really, really pick up. There's equal lows below this low here, right? Over here. Oh, whoops. Right there. There we go. Yeah, that right there is enough. I mean, all of this was enough showing us that it's holding. It's not willing to go higher. Hasn't broke our invalidation. So any retracement into that, I would be watching that. I'd pay close attention to how the bodies close when it gives you that retracement into it. Again, the risk of a lack of follow through and it's just hanging around, it is there, right? We are still in the macro. So if it's going to move, it should move now. Like we would like it to move now within this time. It's got 5 minutes until the macro is over with, but it started in the macro right there. So my attention's on that London low. I'd really, really like to see that London low get taken. So let's see what it wants to do here. Watch the bodies of the candles here. We've got a wick, up candle. We have a bearish breaker inside of a larger one. So let's see what that wants to do here. See if that can offer the slide down. See, what is the other assets doing? So S&P looks like it's going lower. That should assist in dragging the Nasdaq if they are going to end up going lower. We got S&T at the highs here, I believe. Yeah. Yeah, it's still just very nasty. Look at it. It's just not really interested in like giving you that clean, normal delivery towards liquidity. So yeah, we'll see what happens. We have our little levels in here to watch. All right, we got up candles. Let's see on the 6 minute, do we got an order block? Kinda. Okay, let's go see. Yeah, very, very nasty. See what happens. I'm not willing to touch any of this. Like really, like this was something I was considering here, but this here, I'm not. I'm not interested. This candle was going to determine whether I was going to get in. If it could give that little push, I would have got in. It didn't even give us a little push. So we're just reverting back to equilibrium. It's pure consolidation. The 4 hour shows it. So I'm not interested in really touching this whatsoever. Just think about it. If you got into anything in here, unless you pick the highs, which in reality, what is the likelihood of you doing so? Right? Like what is the actual reality? Right? If you're going to be honest. Right? What would you have used to trust? Because there are ways to trust picking a top and bottom with SMT and a few other tactics, right? Intermarket relationships and whatnot, higher time frame levels that the SMT forms at, inside of the right time, the right day of the week. There's ways to do it, but if you haven't practiced that, what's the likelihood of you catching the highest of the high versus a continuation, right? The odds are pretty low for most people. So yeah, let's watch this here. Very nasty. Still respecting the overall underlying idea here with this bearish breaker. Still closing below the midpoint. So now we got a fractal high here. This is an intermediate term high. Lower high to the left, lower high to the right. Higher high in the middle that hits a fair value gap and moves away. So until this is taken out, we're still valid. It's still valid to keep going lower. This is a lower time frame intermediate term high. Relative to this time frame. Again, I'm not too sure if we're going to get a large expansion here. It has done absolutely nothing in this macro. We still got the silver bullet consideration, which is the first presented fair value gap on the 1 minute inside that 7 o'clock hour. But it's doing a lot of this, like tag the low, come all the way back. Tag the low, come all the way back. Tag the high, come all the way back. Right? So it's definitely, like I said, a lower probability day. If it is going to short, the best shorts come from the open price overnight. Right? So that positioning looks kind of nice. See what happens here. It's not too bad. Not too bad. Hopefully it could stop this like lethargic lack of movement. Yeah, it looks like we're starting to open up now because the macros matured now. The move that has began here has started in the macro, so see if we could blow that low out. All right, looks like we're still headed towards London's low, like I said. We'll see. It's a lot of lack of follow through today, so we'll see. right? 20 to 30 points is really all you need. Yeah, the underlying idea, like I said, has not been turned off, right? Once it broke down, we saw this as a bearish breaker. So once it breaks down below this, right, it needs to hold below that. It did give us this one little punch, but this kicked it back on. And so anything beyond that, right, could have been used to reference to then try to go lower, go short. So we'll see if that can give that follow through. It may, or we could stay in the range because of CPI. So I wouldn't really be too surprised for either one. But so far, the body's what is it telling us right now? Price action. It's telling us that it's now opening up to get down below this low. Nothing's really changed that opinion unless it was to displace and break through these levels. So the whole short idea that got triggered once it broke this low to target London's low or a little bit beyond that to or before that and a little bit beyond the London's low with this extra level down here. Those are still the target at the moment. And as long as this keeps happening, right, creates wicks, bodies close below, wicks, bodies close below the midpoint, we should still continue to see this go lower. We have an inversion here too. If we take this little fair value gap there, beautiful little extra piece of the narrative here. And all we simply need is it to tag that. We'll see if we can get it. Maybe not, right? It may stop right there because CPI, I mean, that's just what it does. But there are equal lows there. That is, pre-AM session low. And then we got London's low down here, like I said. So it looks like it's interested in tagging those. But we'll see if we can get that. Again, nothing has told us otherwise. Right? We got this wick here, 50%, bodies closed below. Nothing's telling us otherwise at the moment. And let's see. That's enough for me right there. Let me show you guys the business. Okay. So right there. So this was the idea, right? I did toss a entry in there, small one contract, put the stop up to the midpoint of this wick here. Here is business. Those that like this stuff. Okay. Amp live account. Took an entry right inside of this level. Remember I said when it tagged that, this little blue candle right here, took an entry there. As it went up against me, I had 3 contracts on. I took some of it off, right? That's what this little area is. And then price continued to drop and I added a little bit more. So in total 4 contracts, and went all the way down to there and I tagged it at the low. That was 40 points, risking 34. And that's just the way it is. Live account, narrative that we talked about. No other executions are up here. I didn't take any trades in here other than the one trade that had 2 entry points, right? One that was early at small risk, and then I added the normal size once we got down into this. I started slow because again, it's low probability, high resistance. I'm not going to go in with 5 contracts when I know that's the condition. Why am I going to do that? If I'm unsure, why don't I just test it out a little bit? Right? Once it got down to here, I was pretty sure that we're going to target these lows. I still think there's a chance for it to get down to this low or this low. But honestly, this is all it really needs to do here, right? But it's set equal lows here now. So I think that it is a candidate to get blown out. Again, nothing in here has told us otherwise. So there's really no reason to think otherwise. Now, again, if this ends up getting beyond, say it breaks this high, then we'd have to start to consider the fact that price may be looking to continue to go higher. Okay? So yeah, we'll keep tabs on this. But yeah, that right there was a reasonable execution. You know, if you guys have been listening to what I've been saying and you independently make your own decisions, if you felt confident in here, again, that offered opportunity. Right? But it depends on you. Depends on how much you trust what was happening in here. Depends on what you like to execute. This is a breaker, right? Low, high, lower, low. Low, high, lower, low. A nested breaker inside of a larger swing. Right? Looks like it's going to continue. Right? We'll see. If I was trading this and I was more certain that we were going to take this low out, once it creates an order block like this and it trades through it and returns back into it, that's where I would pyramid or add to my position. Right? So anything before that, I mean, it's not worth really adding to. Maybe here, if it was a different day that wasn't ahead of CPI, that wasn't showing a real lack of follow through, you know, maybe it'd be okay to do that. But for me personally, it's just not. It wouldn't be something at the moment with this current condition. I wouldn't look to try to pyramid or do anything crazy. Just take your 20 to 30 points and get out. You saw I was able to bag 40, 10 more than the normal average that I tell you guys we should be targeting. For those that are trading, right, and want considerations for targets. Again, I don't encourage you to take trades off of anything I tell you. Sit here, listen. If stuff resonates, use the logic, right? If it doesn't resonate, don't use it. If I take a trade, that doesn't mean you take a trade, right? If I point out an opportunity, that doesn't mean you should take the opportunity. It means you should study. You should look at what price is doing and learn why I'm talking about these things, right? Yeah. Oh, yeah, I know. Yeah, Mike. Yeah. Yeah. A lot of people would love nothing more than to come and live in my house and eat my food, right? And have me give them a paycheck off of what I've done to prove to them. Go buy a Lambo right in front of me, or otherwise I think the Lambo's not real. Type of stuff. I mean, it gets crazy. You'd be surprised at some of the things that I've experienced trying to be a mentor, which I understand, right? I understand it, right? But I have a certain type of person I'm trying to bring into my fold so I can help them. I don't want signal junkies. Like I've kicked people out of my group and gave them refunds because that's what they focus on. You're not giving me signals. I'm like, I don't put you in trades. I'm teaching you how to gain clarity on your own. If you don't like that, go watch whoever that's jumping up and down, popping champagne and flying confetti everywhere and giving you, like ridiculous amounts of nonsense, right? That's maybe more entertaining. Most likely not more profitable or consistent, but they're entertaining. I'll give them that. They get attention. But what should be getting attention is whether you can do this type of stuff every single day. Mike, tell me if I'm lying. You're in my private group. You've been here for, you said, 6 months. When I say that we do this every day and we find something that's profitable to trade every day, potentially, right? Like potentially meaning like you may or may not have had the confidence to take it. But every single day, don't we call something that goes right to target? The setup is there clearly, and we point it out. And it's just all the time, every day. Isn't that a fact? Right? Anyone else too that's in my private group, is that not a fact? Do I have to show you a Lambo to prove that that's the truth? That it works? Like, is that necessary? Is it really necessary? Or is that just something that, well, I know that it's something that makes people feel comfortable to know that, you know, they get to see into their personal life and see what kind of money they spend. Right? But again, what I buy, how I live my life, it's not how you're going to be able to live your life. Right? So, like I said, this is something to watch and observe. This would have been something I would pyramid if I was still in this trade, didn't take my 40 points. When it breaks down like this, that's another change in state of delivery. And we have a main target that hasn't been swept. This is a short-term target, right? This is a more prominent target with a larger liquidity volume, which is the London's low, because it's from overnight. So it's the low of London. So if they're going to target, say, this low, many times on its way to targeting London's low, it'll sweep these up. But this is the main target. So we'll see if it can get down there. But this here, if there was a return back into that, that'd be another idea. We got a low, high, lower low. That's an order block. It's also a breaker. Low, high, lower low, breaker continuation pattern. Okay. So yeah. Yeah, Mike, it's been that way all day. But look, these are good things to sit with. Okay? These are conditions and things that you have to experience. If you experience this stuff on your own, I mean, there's nothing wrong with it. You don't have to have someone teaching you and helping you. But it helps to have someone that can talk through this stuff calmly, that knows what's happening, that knows whether something is valid or not, when it is going to continue to be valid or when it's going to turn off, when you should change your perspective versus hang on to the narrative, it's probably going to keep going type of vibe. Not only their opinion, but the why behind that stuff as price is printing this type of behavior. Look at this here. This is a market maker sell model too, by the way. Right, so consolidation, accumulation, smart money reversal, first stage distribution. That's all it needed really, because there wasn't two stages of accumulation. So it used this low here to that high, right? Because that's the accumulation. And go from that low to that high. This in itself was treated as a balanced price range because it's part of the, again, the market maker sell model. Look at how perfect price lines up with that. Isn't that fascinating? Right? Yeah, that was a reasonable move there. Let's see if it can give that one last little punch. That this in itself would be another 30 points. Again, it's very, very slow and lethargic, so I don't know. You know, this would be a more low probability, you know, more risky type of thing. So if I, you know, was to execute something like this, which I wouldn't because of the day that it is and the circumstance that's happened is we took this trade and it was profitable. I'm not going to push again. If I didn't take this trade, I'd be very skeptical to take this one. We're outside the macro. We are close to the level, but it's very slow. We got CPI tomorrow. I'd probably more likely wait for the next day. I wait for tomorrow and then CPI comes out and then we'd look to trade 30 minutes to an hour after that. And things would be a lot more clean than they would be here. Does that opinion mean because there's a risk involved with this not working out, does that mean that this won't work out? You know, we still could get down there. You know? Yeah, Mike, you're absolutely right, bro. You're absolutely right. You don't need some magic bullet. You don't need every ICT concept. You just have to understand how to, like, where price is going to go, how to read price, and what is important right now. Every single PD array in the arsenal of ICT's logic and in my own logic is not applicable every second of every day. What is on the higher time frame that's in close proximity and what's in price currently at the moment. Look at the 4-hour candle now. You see how the 4-hour candle right here was a bearish power 3. You see this wick here, how it respected the previous one? And now we're down below this. I mean, that makes it way more likely that we will potentially get that follow through. This here supports the move that I took over here. You know, it's something that I was banking on when I witnessed this here. I saw the wick there. I'm like, okay, yeah, well, that should be reasonable for us to release in there. Right, and we see that it did. So the continued follow through, right? This down candle here, we're part of the expansion now. It's already done the accumulation manipulation phase of the 4-hour candle, right here. It's proven respect to this wick here on the lower 25%. That is indicative of price continuing to try to reach for a little bit more sell side. It's not ready yet to go higher. But once this goes lower here and takes this low, if this closes as a down candle and then we get a candle that trades beyond that, that's a change in state of delivery. And that will tell us that it's time to now start to consider going higher. And then you look at the daily chart, you go and see kind of what it looks like on that, right? And then we may get this to be, again, the down candle. You see the wick here? You know, price tried to get up there. That was what this was, right? This high failed to even get that 50% of this wick. So what did it do? It ended up getting back down below its own open price here for the day. The previous 4-hour candle, you know, like I said, kind of stalled around. The last couple of them have kind of stalled around. But now this one did the same thing. It failed to hit the wick there, and it just bang, it dropped. And it looks like it's continuing. Look, this is low probability, high resistance. But look, even in high resistance, we're still able to find something that could work out. We're still able to find something that could be engaged if your skill set is at the level where you'd be confident to take something like this. Right? This here was a breaker. That breaker was supported by this here, right? When it traded back into it, that's this candle here, right up in this. Respected that, dropped down. You know, that whole drop down here on this candle, this 4-hour, you see what it looks like on this candle, right? It's referring to this breaker. That breaker is inside the high of this wick here on the previous 4-hour candle. And the current 4-hour candle couldn't even get to the previous wick midpoint here, which is up here. It failed. This also created a breaker. A breaker is a balanced price range. I said that it should continue to hold this, and until it gets up beyond this midpoint here, I will still be bearish. I will still be looking for sell side delivery. So if you think about it, with the things that I do, and what I've done today as well, which I do every time, I bring you as close to what price should do as I possibly can. I do everything that I can to get you as close to price as I possibly can, outside of saying buy here, sell here. I sometimes point that out too, as far as what I'm doing, right? But I encourage you guys to go look at anyone else's live stream today and listen to what they've said versus what we have said. How we were in sync, how we were not fooled about what price was going to do. It was sideways, right? We put the inversion, the invalidation level up just in case it breaches it, because then we would have had to go the other way, right? We talked about this here. I said that this needed to be watched and respected if it was going to keep going higher, right? That failed, and then once it broke the midpoint, we adjusted, right? That adjustment led to us seeing this breaker. That breaker continued to hold, like we said, the whole time. It created another breaker here. I said that if it breaks down below this, it should be able to hold that. It went a little deeper, so I hesitated to take an execution because price was telling us it's not ready. It's a rattlesnake. Do you want to get stopped out? Or you want to wait and get a better opportunity? Then this candle here proved to me, because we're closing back below this lower portion of the wick, or the breaker here, on the very next candle, an execution was thrown in. I did throw in a small one in here, right? Had my stop above this high, almost tried to save the stop, right? You guys saw the two arrows over there for the downside overall view. And then price ended up continuing to go lower, right? So yeah. And then now we're here. So let's see if we can blow this out. Once we tag this out, I think that'll be enough for today. We've done a lot today. We've talked about a lot. So hopefully you guys weren't too distracted earlier from the all caps situation. Hopefully you guys are able to follow along. A lot of you guys, this is just review. You guys have been here for so long. And you see this stuff just works every day. This ain't nothing new. And well, guess what? Guess what's going to happen tomorrow? The same thing. Whether it's CPI or not. You guys see that when we trade, even during news events, we know how to operate around it. Sometimes you get it right, sometimes you get it wrong, but that's the same with every day. And whether you get it right or wrong, it doesn't matter. Like taking this winning trade, I'm not going to go and bounce around and, go too hard about the fact that we want to trade today. It's just the same thing, right? Every day it's the same thing. Win or lose, as long as we follow our protocol, it's just work that I absolutely love, and thank God that I have the opportunity to do, but it's just work. Do you go to your job and prance around like, yeah, I'm here to make more money for the man? Yeah, I'm so grateful that I get to just do what I'm doing, which I don't like, but I'm going to keep doing it because I just have to. But yes, I love it. Like, do you go there and think about these things in this way? Like, you're making your paycheck, you're getting paid for the day. Do you leave the day super excited that you got however many hours for how much you get paid? Is that how you react? No, of course not. It's just something that we do. We go to work, when we have jobs, and it's expected. It's the same thing with this. It's very exciting, and I'm sure a lot of you guys are way more passionate about stuff like this than you are about, some job that you might not like. There's some people that won't quit their jobs either. I have 4 students that still work a full-time job, but they're able to now give themselves a raise whenever they feel like it. And they love their job. Some are in tech, some are in the trades. They like to work with their hands. They just have a passion for it. And they don't want to quit. Even if they could, they don't want to. They wouldn't. And there's nothing wrong with that. But if you hate your freaking job like I did, yeah, I'm helping my cousin with a side job, and it's doing construction. I used to do HVAC for years. I couldn't stand it because I was not getting paid enough, and I would always have to be stuck doing the shitty part of the job under the house, in the attic, doing all that stuff while there were other people simply putting in all the technical things, which is what I went to school to do. But of course, I ended up not being able to do it because seniority is how they place people, I guess. I knew pretty much more than those people, but they still put me in the shitty parts of the job. But helping my cousin do this side job for this old lady, I enjoy it, but it just reminds me. I was making $30 an hour, like barely. I was like really, really struggling to make enough money here in California. But I was doing so much work, and I was gone for 10 hours a day, 5-6 days a week. And it was just brutal. It was brutal, super brutal. It reminds me, now that I'm helping my cousin, who's made it worth it, right? Because I told him, I'm like, dude, if you're gonna give me like $100, I'm not gonna do this. I'll just stay home. I don't need the money. But doing it and helping him with it makes me really, really appreciate all the time and blown accounts and investment in mentors and relationships I've built, overcoming the doubts, all the stuff that I've dealt with. To be where I'm at today, it makes me really appreciate where I'm at today and appreciate the fact that I didn't quit. because many do. I started trading with like 40 people. It's only me and 2 other people that still trade. And at this point, we're all able to make money, all 3 of us, while the others are asking us to teach them. Like they're like shocked. Like one of my friends just bought a home. He bought a condo in Chicago just off of trading. And we started together. It's amazing, you know? I mean, it's crazy when you think back on it. Like you want to enjoy the process. You want to get around people that are going to lift you up, people that know what they're talking about, people that have been where you're at. Doing it alone is very lonely, you know? It could be very lonely. And when you become full time, if you do ever achieve that or want to achieve that, you got to manage your life properly. It's not all about the charts when you become full time, although it seems like it would be. Or in some people's eyes, you have the fantasy of like, yeah, I'm going to have a laptop and I'm going to go sit on the beach where there's hella people around, all these distractions, and I'm going to just trade, buy a Lambo, do all this stuff. Like that's going to be the life, the laptop life, right? Although that's possible, when you become full time and know what you're talking about and know what you're doing and understand how serious you have to take this, you're not going to want to trade outside of your desk. Maybe if you go and travel, you buy like the 3-screen monitor attachment, you could, go ahead and do that. That's possible. But you're not going to want to do that. I wanted to do that. I did it for a little while when I first became profitable. I was like, yeah, went to the snow. I did all kinds of stuff with my family, showing like what I was doing, how while I was on vacation, I was making a good amount of money. And that at that time it was like $3,000 that I showed. Like, hey, I'm literally skiing, and I just took a trade, and I made $3,000 on the ski lift as I'm going up. That's all my highlights too. I think I still have it there. But I quickly realized, like, yeah, it's too stressful. I'm trying to enjoy what I'm doing, both in trading and if I take a vacation or something. I want to be able to enjoy it. I don't want to think about work, even though I love it. And it's really hard to not, like, at least stay plugged in, because I got to come back and I have people that depend on me to help them, right? So I don't ever really separate, right? But I do enough uh, to enjoy myself. But, you know, there's a lot of fake things that people do to portray what the lifestyle is of a trader. It's really, really amazing. Don't get me wrong. But it's not like it looks like on social media. Very close. You can get it to be close, but again, you have to know exactly what you're doing. You have to have a good amount of money backing you up, like at least a year or two, minimum 6 months of emergency funds. And you want to be able to have been full-time trading for at least a year or two, right? If you want to have this whole laptop, like, let's chill. But even then, a lot of people can't do it because of distractions. It's a vibe when you're at the desk, fully locked in and focused. You're at your best. You allow the environment to put you at your best versus trying to do what, looks to be the reality on social media. And mind you, most of these people doing that whole lifestyle marketing stuff, it's not from trading. Like these people that do this, they're not live trading. Some of them are. I know a handful of them that are, and kudos to them. I've known them for a while. And it's amazing. Some of us can't do that type of stuff though. I don't personally feel it's effective for me to do certain things, like live like the laptop lifestyle. And most of these people, like I said, they don't make their money off trading. They have so many other things that they're doing, from YouTube to selling courses and whatever else. It's where the maximum amount is coming from, and I don't have to do anything. I come on this to help for free. I don't need to do this, right? I don't make no money off YouTube, right? I literally do this in the most pure sense for free. You know, I do it in my private group, but it's because I do want to help people, which is it's cheaper than everyone on purpose, versus what is given to you compared to everybody else. But I only have a paid portion of it because the students that I was helping for free were upset that I was upset that people were just not taking things serious when I would spend hours helping them on a one-on-one basis. They'd either be signal junkies trying to just demand that I trade for them, like they were trying to give me money to trade for them while they're saying they want to learn. There's people that were complaining, like it was just a mess, and I was stressing myself out doing it for free because I really wanted to help people. Because I was just, well, I still am super, you know, grateful that I have the skill set that I have. But what's the point in having a blessing if you're not going to pass it forward? And you don't want to pass a blessing forward to people that don't appreciate it, that aren't going to like actually use it. At least with something like this is how I see it, right? And so my students were like, "Oh, make a private group." I'm like, "Well, how should I go about doing that? I don't know how to, like, what should I do?" It started on Telegram. It was free. And then my mentorship students at the time, they were telling me about Discord. And I'm like, "Oh, okay. Discord is definitely better. I can make it way more organized." And then that's how the Discord started in 2021. And then I had conversations with them. I was like, "What should the price be?" Because I don't want to be like everyone else charging so much money. Like I want people to, I want it to be accessible, right? At least being part of the community to be accessible. Working with me one-on-one, I mean, that's a different story. I only have so much time in the day, and I don't have time for people that aren't serious. So there is definitely a barrier on that one. But hey, I haven't had one student come out and say, "Oh, well, that wasn't worth it. Being around you was not worth the time I spent." Yeah, okay. Not one time has it ever been said. And I don't think it ever will be said unless you're a signal junkie and that's what you're looking for, because I won't be able to serve you in that way. But if you want to really learn and you're spending time here, it's not only me, like students in the chat, like Mike, Jen too, eventually. Who else? You know, anyone else that's like a regular here that comes and hops on, like George, right in the chat. Tony too. He's only a student on YouTube, and he's been doing pretty amazing in terms of his progress. And there's many others, right? It's a machine of monsters that's being created here. So it's not only just me, you know, and all of you guys appreciate what I do. You show that, for those of you that are here on YouTube, you show up by keeping me updated, and I see where you start and then where you end up after like 3 to 6 months. And it's fascinating. Not only for me, but, you know, from you guys, you guys tell me that it's like incredible. Like the clarity that gets given. Because again, that's what I guarantee from this YouTube channel, but especially when we're doing this every single day, right? Like looking at the chart, pointing out ideas, you know, navigating this nastiness and the good times, right? Proximity to success is real, right? If you have proximity to people that are doing what you want to do and have like things that you want, right? Like maybe mindset or, you know, whatever the case may be, the closer you can get to those things and the more you can absorb whatever it is that they do that got them to where they're at, the more likely it is that you will get to where you're trying to go. If you're with a bunch of losers that are signal junkies that don't know what the hell they're talking about, and they're just playing this like a gambling game, what do you think your skill set's going to turn into? Something useful? Or is it going to be a liability? It's going to become a liability. So whichever direction you choose to spend time on, you're going to become that, whether you want to believe it or not. You know, what's that saying? You are the average of the 5 friends you keep around, or the five people you keep company with. You know, whatever that saying is. Probably butchered it, but that's completely true. You know, I used to hang out with a lot of losers. You know, I didn't think they were losers. I was one of them. back then. I'm just grateful that ICT came around. I'm grateful that I had a child, right? These things completely changed my entire perspective on life, and getting around people like the two people that I mentioned that I started with out of like 40 or 50 people. I'm grateful that, we've kept in contact because they've also helped influence my mindset too. We all have the same experience, but different life experience. So again, it's good. It's very important to keep people around you that are going to lift you up, sustain you through the hard times, people that you can confide in, ask advice from, that aren't going to judge you, that understand what it is that we go through, because it's not a cakewalk to do this. I mean, I'm already just like anticipating when I go open up my Instagram inbox, I'm going to have like 5 messages. I already looked. I have 3 new messages from this morning. I don't know who they're sent from, but I'm sure for a fact someone hurt themselves in this choppiness. And, one, if not all of them, it's going to be referred to something that has to do with overtrading. Trying to push too hard in something like this when, right from the start, we said it was potentially going to be a harder to trade environment. So yeah, just think about some of these things, think about some of this stuff, proximity to success. Think about all the things that we talked about technically. Don't be too hard on yourself. Remember, this takes time. You guys are in a place where I show every single day what I do and that this stuff works. And all you got to do is just take what works with you that you think can help push you forward. Disregard the things that are not going to push you forward. And believe in yourself. Don't be negative, right? Try your best to grow every single day. And, you keep good company. You keep this mindset. You respect risk and continue to study until you reach where you're trying to reach. I think that you guys have a lot of positive things in your future and even if you may not see it just yet, because maybe you're struggling, you're doing something that is hard. It takes time, and great things take time. And again, it's very helpful to be around people that can help you cultivate this mindset, and be there for you, which, I try to make this community that type of resource outside of the whole trading and consistency thing. Let me see. Bullfrog. What's up, Mark? What's up, my brother, yo? I'm waiting for you to make content, by the way. Whatever you're comfortable, bro. Let's talk about it, bro. Let me see. Can be honest. WMG helped my mindset in trading. I did initially come as a signal junkie, but made a decision to go down the long road. Damn, Mark, I didn't even know that, bro. I didn't even know that. That's awesome. That's awesome to hear. Because if that's true, I mean, how many conversations have we had? We've sat down for hours, multiple times. It's been what? It's been 3 years. You saw that, the 3-year anniversary thing? It triggered. You've been with me for 3 years. And it seems that things have completely changed. Seems like things have completely changed. Mark, let me know what's going on if you're open to keep me updated. Yeah, it does, bro. Time flies when you're having fun, bro. When you're around good people, when you're doing something you love. I mean, time can slip away. Could be a good thing and a bad thing, right? Because experience gets accumulated quick, but again, you don't want to neglect things like if you have like family and maybe a kid, girlfriends and wives or whatever, nephews, nieces, right? All that stuff is very important. So yeah, it does feel like it's only been a year. It's wild. Yeah, look at this nastiness. Yeah, I'm not interested in this. So let me see. Finishing up my live model, just fixing minor bugs. Crack at your model later too. Okay. Yeah. Take your time, brother. Take your time. I'm not gonna rush you. Take your time. Let me know what you find, and we'll continue to sharpen these things up. And you could take anything from it if it helps your model too. Whatever you could find, that I'm open to you taking whatever you need to get your thing firing properly. So, but yeah, Mark, keep me updated. Again, thank you guys for hopping on. Appreciate the trust as always. Those of you that stick around, you guys know the vibe. Every now and again we get people that are pretty interesting, but even if they stick around, they may start with one perspective, but if they stick around and show up long enough, I mean, I make it so blatantly obvious that what we do here is worth listening to, that they'll have no choice but to either admit it or get mad and talk crap and be a hater over it because they can't do anything about it. It's two roads, right? It's up to you to decide which one you want to go down. So, but yeah. So again, God bless you guys. Appreciate you for hopping on. Hopefully all this stuff made sense today. Let me know if you guys have any questions. We'll begin live, but we'll be again live here on Sunday for this YouTube channel, and it's Thursday, so tomorrow we'll be live with my private group. Pretty much at the same time. I'll be up at 3 a.m. as always, but I'll be up sending the link if I see you guys are up. Probably around like 4:30, somewhere around there, a.m. Pacific Standard Time. And we could, hop on that super early time, and then we could go over some stuff if you guys need to answer any questions. But yeah, otherwise, be on at least by 5 a.m. Pacific Standard Time. For those of you in my private group, if you're going to join us tomorrow. Okay, so yeah. That being said, keep your eyes on the headlines. I'll keep you guys updated. But yeah, God bless you guys. Let me know if you need anything. Sunday we'll be live again at 5 a.m. Tomorrow live again at 5 a.m. as well with my private group. Okay? So yeah, God bless you guys, and I'll see you on the next one. You're welcome, George.